What would you want to hear from Jensen, regardless of whether he actually tackles it? What is the number one piece of information you want him to give you today?
So I think the number one piece of information is confirmation for ongoing scaling law improvements. And so the idea is to say that you're throwing tens of billions of dollars at AI, and AI continues to improve. I mean, we heard Mark Zuckerberg on his earnings call saying that training their next model is going to be 10 times more compute intensive. Those types of comments are very important for the long-term story of Nvidia. And I think actually the core focus of the call is probably going to be on some sort of theme like that, because that drives the growth of the next 1, 2, 3, 4, 5 years. So sort of are scaling laws still holding true, and what's the evolution of AI within that?
So it's quite a long-term picture you want, Daniel. And what's interesting is everyone's suddenly using this horrible turn of phrase of sort of return on AI. Does it matter what the return on that investment is if companies just have to stay in the game no matter what?
So I think some companies are already benefiting massively, right? Like Meta, for example. I mean, they've added $1 billion in market cap and started growing 20% because of AI. But I think actually for now, the question of ROI is too early. And I'll tell you why. First of all, we're going from this world where we have clusters, AI clusters of less than 100,000 going to 1 million. That means we're going to train way bigger models, way better models in the next 1 or 2 years. So we'll have to see what these models can do to really assess ROI. So that's a big question. The second question is actually, if you go back in time and look, for example, at the introduction of Microsoft Excel, every company in the world had to use it to stay competitive. I'm not sure every company in the world generated more revenue because of it. AI is probably going to be similar. So some companies will generate massive revenue growth, like Meta. Some companies, the ROI is going to be you stay competitive and within your industry, and you have to pass on the benefits to your customers. But you got to do it no matter what. And maybe that comes back to sort of your point. This is a little bit like the space race 2.0. You got to be in it to survive.
Daniel, the story so far has been about the hyperscalers plus Meta spending. That's been all of it. And I wonder to what standard you hold Jensen Huang to demonstrate that there's more than that outside of basically just 5 companies as customers.
Yes, so I think there's actually way more than that. So there's some smaller players, so-called GPU clouds, companies like CoreWeave, Lambda Labs, they're significant customers. And actually the second thing, for some of those hyperscalers, the use case is not internal, but it's actually external. So they're buying these GPUs and they're renting them out to companies that want to train some sort of new application, usually sort of venture-backed type of startups, right? And I think the key thing to look here is when do the Fortune 2000, when do the big companies start going to these clouds and start training their own models? Now, Nvidia has a solution for that called Enterprise AI. They're trying to make it easy for them, but we have to start seeing that.
Well, Daniel, let me jump in. I mean, I'm trying to actually define what Nvidia is. Is it a chip company? Is it a systems vendor? And then they have Nvidia GPU Cloud. And I look at that and go, does Jensen Huang just want to be a cloud provider in his own right?
Yes. So I think Nvidia is the world's leading system optimization company, and it starts with a chip. It continues with the software, and now they're going rack scale and cluster scale. And some of those systems have 600,000 parts. I mean, that's a big, big problem to solve. Now, I think what the company is doing, I think the idea is more to be the cloud within the cloud rather than a cloud yourself. So it's actually much more lucrative to sell to many, many parties and get a big fee out of that rather than creating your own cloud. So I do not think that Nvidia will create their own cloud. It's actually just fine to sell through third parties like the hyperscalers and the GPU clouds, et cetera, et cetera.
Daniel, Sands Capital has $46 billion in assets under management. There has been so much zeitgeist, psych, euphoria around this one single name that many have launched ETFs that are double leveraged the particular moves of Nvidia. And you just see the demand, near record shares outstanding for Granite Shares 2x long Nvidia daily ETF, for example.
What a chart.
These are, exactly, what a chart. Hat tip to Dan Curtis, we thank him. This is all about ultimately wanting to get long in whatever way you can. What are you seeing, Daniel, in terms of your exposure? How long do you get Nvidia?
Yeah, so I mean, and we'll go over time. Maybe we'll get a bit bigger, smaller over time. But ultimately, I cannot imagine not being invested in Nvidia over the next 5 to 10 years. And I'll tell you super simple why. It's pretty obvious that we're going to need more computing in the future, right? More computing within healthcare, drug discovery, self-driving vehicles, factory automation, enterprise AI, you name it. It's going to go up a lot. And the second thing that's fairly obvious too is that Nvidia is a leading company in the world that provides compute, right? And there's a bunch of other companies doing it too, but Nvidia is a leader. So if you add those two together, it's very likely that Nvidia is going to be a much bigger company over the next 5 to 10 years. Now, that doesn't mean that we don't have a down cycle at some point. It doesn't mean that we have, maybe a bit of an overbuild at some point, and then we go back to, acceleration. But that's sort of how I think about it longer term. It's the beneficiary of the growth and compute needs in the world.
You acknowledge there are other AI accelerators out there, MI300X, AMD, Gaudi, Intel. To your mind, how is it that Nvidia maintains its position as market leader?
Yes, so I think it's a little bit like that Wayne Gretzky saying of go where the puck is. So Jensen tends to be there already, and the others are following a little bit. And it's just beautiful, right? Jensen has seen this 15 years ago, so he started off with a chip. He built the software.
Don't give me that. It's beautiful. We're talking about computer hardware. Come on, Daniel.
You think the same, Ed.
I think exactly the same. Pot calling kettle black. Keep going, Daniel. Sorry.
So it's sort of this idea of like you went from one chip to a big system and you optimize that over time. But in order to do that, you need many parts, right? You need the software, you need the hardware, you need the GPU. Now they have a CPU, a networking chip, et cetera, et cetera, et cetera. And Jensen has seen this earlier than anybody else, and that continues to be the way, right? The others are catching up. They're doing M&A to do that, and it's fine, right? They're great companies. But ultimately, if you want the cheapest compute, the cheapest dollar per compute, Nvidia is the best company to go to, and it's unlikely to change in the future. And I'll give you one example here. Like, imagine today we got a chip out that's double as good as Nvidia, and they would ship it to all of us. The problem is we wouldn't know how to use it because the software isn't there to use it. Whereas with Nvidia, they've created the entire software stack for each industry in the world, and it's actually easy to use because of that. And we would have to hire people if we wanted to do a third-party chip rather than Nvidia, and that's sort of the secret sauce